Entry models, price action, indicator. Every time I execute a trade, I seem to still not get it. This is literally what I hear from students and every single trader, and this is exactly why I'm doing this video, because I want to walk through and guide you on how you can grow any account. And I'm talking if you're a newbie starting off with 1,000, 100 or 500 or even more than like $10,000. I'm going to show you an entire roadmap how you can find the best entries while trading US 30. And within that, you're also going to understand how effectively you can scale and grow an account by following simple strategies and simple tools that we utilize to make you a better trader. So let's go ahead and get straight to it. Now, when I first got into trading, I actually never had something like this, which is a trading plan. I'm curious to see how many of you actually do and don't have a trading plan. Literally leave a comment down below so I can just help you guys out. Within this trading plan, it has every little detail that I need to understand how to be an effective trader. And this is where this idea of lock and trade came in. This is pretty much what I use to figure out what strategy actually makes me money and how to effectively trade it. So if you see right here, we pretty much have a couple different strategies: 3-man standing, Fibonacci, just random trading, and liquidity provider. As you see, each of these have different win rates. So what we and our team did, basically, we figured out like, all right, I can see that the 3-man standing strategy has an 86% win rate of about a total gross of 10K. And if I go into my details calendar, I can literally see what actual days were more profitable than other days. I can also see what were my top trades, and I can also see what were my least trades. And most importantly, I get to see the top assets that make me the money. And at the time it was GJ, oil, of course, NASDAQ, and gold. But in this video, we're going to be going about US 30. What we're going to be looking at is our Fibonacci. And within our Fibonacci, we have our golden levels, which is the 50% mark and the 618 mark. And then for our TP, we're going to be looking at 0.27 and we're going to be looking at 0.618. These are negative endpoints. So that's kind of like the expansion of a Fibonacci. But within that, I'm going to be sharing something to you guys. So you got to understand the full concept. So make sure you watch that part when we get there. And then next we talk about Wick rejections. So we're going to establish Wick rejections, as this is a major price action reaction that we need in order to effectively look for these solid entries. And then we're going to look for what I like to call market structure shift. This is where we look for the lower high or the lower low, and then it's just shifting the market. This is giving us that sniper momentum that we're looking for. And then we also have our PNL and PNH zones, which is basically my unique lingo that I like to call, and it is my potential new high and potential new low. So this is where we use the Fibonacci to figure out where the potential new high and potential new low will go. So when I talk about the potential new high and the potential new low, this is where when we take the entry, which could be here, we are determining that the potential new high will be somewhere around here based off of our technical analysis. So this gives us the opportunity, once we have that entry set up, we wait on a candle here. Once we get the candle here, we then enter here, stop loss is literally right there, and then we take the buy. Now, of course, this is a perfect setup, but I always have to show this so you guys can fully understand, because I like to break things all the way down. So let's pay attention to the 1 minute time frame on US 30. When you are trying to look for a sell, the first thing you need to see is a break of structure. Here's the reason why. You will never know until you know when the structure is actually broken. So what I mean by that is, when you're saying that, are we going down? Yes, you know that because we broke the previous low. As you clearly see, this was a low, we broke it here. So that is the very first thing that a trader needs to have in their mind. Now, when it breaks structure, we have an idea of, 1, where it can end, 2, where it could pull. Why is this? Well, look left. When we look left, we look at the previous structural range. And that means wherever the major high and the major low is at, still being on a 1 minute time frame, that is the range. So if we look left, we see that this is our high and this is our low. Now you might ask, well, why is this not it? Why is this not it? This is simply because major structure, which is here, major structure, which is here, was broken. And this identified the lowest point before it took out this high. So this is where I'm gonna mark my Fibonacci. And when we draw out our Fibonacci's, we started from the top and the bottom. And it's no perfect world, guys. You don't need to map it from the top to bottom. It's up to you. You can literally do it where most of the candles hit, and I'm mapping it right here. I'm just extending it out. So if you're new to trading or been trading for some time, you can actually now tap in with 𝐒𝐄𝐃 Trade, which is also known as 𝐒𝐄𝐃𝐂𝐃. They now offer a 200% sign-on bonus for the solo TV family. You will go into the site. You'll be able to use the sign-on bonus with the code that you'll see here. And then when you will hit up live chat, when you hit up live chat, they will go ahead and activate that 200% sign-on bonus. Another nice thing that this site has for you guys is you can actually see how compatible your trades are based off of 𝐒𝐄𝐃𝐂𝐃, which basically means you will put in your trades, enter in all your trades, and when you do, it will give you a compatibility score so you will know how effective you will be with this broker. It's very simple. Like I said, go ahead and check the link. You'll be able to use this sign-on bonus and also see how compatible you are for this broker, which can increase the likeness of growing your account or scaling your account any sort of way. As I said earlier, we have something called the PNL and the PNH. As I'm paying attention to the market, I am now going to remove this to clean my charts. And now I am simply waiting on market to tap in here. When market taps in here, I now know that this is where that pullback could happen. And this is why this is also important. When you get in a trade, you might always feel like, am I getting in this trade too late? I don't want to get in this trade too late. I want to get in at the right time. This is why I say entry model is key to trading. It is the essential tool. So you need to understand that without this PNL, it's almost harder for you to really analyze and figure out how to actually trade. So that being said, what we're going to do is once we get that, we wait on market to tap in here. As you see, it's tapping in. It's going to tap in here. We would just simply wait on the pullback. And then within that pullback, we need to identify where market could go to for us to look for a setup. So let's just see what it plays out first. Now, as we see, market just tapped and it's actually jumping further down. So now you might ask, well, if it's dropping further down, why is this? And what could we do about this? Well, here's another explanation. If you take your fibs out and draw it from that point A to point B, there is this red level right here, which if you pause the video, you will see that these are my levels. It is the negative 1.272. This right here is what I like to call my manipulation news red zone, meaning if there was a high impact news or there was some major event happening, this is the lowest point that the fibs could go, or the price could go to this Fibonacci level. I believe obviously at this time that didn't occur. So we're just going to just leave that how it is. So then now, as we are getting that pullback, the next question is, how far could this drop? Or how far could this pull back? This is where you guys have to kick in discipline. Get your plan, create the plan, and tape it on your desk or put it in front of you. And if you do not see this setup, you do not trade. And I'm going to say it one more time. Do not trade if you don't see your fucking setup. That is literally it. As a trader, I'm looking at my midpoint and my extreme point. Why is there 2 points in the range? Because you got to think about it. The midpoint is the equilibrium, which is the balance in between the top of the value, the lowest of the value. And then you have the extreme point, which is like the max of the value. Meaning like if you were to go somewhere and you say that, hey, I have this for $100. Yesterday, this was at $10, but today it's at $100. And then the person you're selling it to say, oh, well, yesterday it was at $10. Now it's at $100. This is overly priced. I don't want it. So now you try to sell it to the next person. The next person also turned it down and said the exact same thing. So now you came to a conclusion and said, well, shoot, if that's the case, I got to bring this price down to something. So you bring it down to the balance of 10 to 100, which you're looking like at about $40. So now you bring it to $40, which then you go back to that person and that person said $40. All right, I'll take it. Basically, that is exactly what happens in the market. Now, the reason why the extreme point is extremely important as well is because some people might just buy it for $100, meaning like that's the highest price. So I'll just buy it. And that can happen sometimes. So that being said, you need to look for these points in the market. And this can be as simple as an order block, a major key level, a POI level, a fair value gap, institutional level, support and resistance. This is literally where you're seeing all of this. So all we're looking for is price to tap into this level here because we had this wick, which identified as some type of blockage. And then we also have a lot of supply all up here as well. And this identified that this is another opportunity. So now we're going to remove this. And within removing that, we are now going to draw out our Fibonacci from the highest point, and the lowest point. And then within that, we see that these are new potential levels that we can take this trade. And then all we're going to do is look for these trades to at least be a 1, 2, 3. As you see, we have one here. And then as you see, we have one here. Now, guys, I really don't know if this trade is going to 100% hit these levels because I really just kind of just looked at it in a glimpse. But be honest with you, if it does, we in it. If it doesn't, this is a prime example of you not getting in a trade. So let's go ahead and play this through. Let's see if we can at least get it to this level. And if so, we are good to go. Now, ideally, this is where it gets real tricky because now you're like, what if it don't hit the actual level? And this is more of a disadvantage in a way because this comes back down to what is your risk? Is it at least a 1, 2, 3? And earlier in the video, I said we're going to talk about the risk. And this is where we're talking about it. When you guys take a trade, every entry should be at least 1, 2, 3. If you don't get a 1, 2, 3, then that is not a trade to take. And I'm going to just leave it like that because that is the most important thing. So let's just say we decide to play this one out after we start seeing some price action. That's what we're going to talk about next. We're going to go ahead and look for a short position. Now, the next thing that we need to see is aggressive selling opportunity. And I am talking major engulfing candles. If I look at this move here, this move here, and this move here, and I just see one little candle, balance this out. See if this candle is bigger than all 3 of those candles. If it's not, don't get in it. If you get some sort of double top and then you see an engulfing candle, but it's still not covering 3 of these candles, then that's an opportunity to get in. Why? Because it basically identified the buyers could not get in the market. So they just said, we're just going to sell off. That is volume price action 101. So let's go ahead and see if we get something. Now we're getting another pattern that's being formed. It looks like a head and shoulders, which looks something like this. You got the left shoulder, the head, and the right shoulder. If we get that, we need for it to break the neckline like that. And then we enter. But this candle has to be an engulfing candle. That is also another price action pattern that we are looking for as well. If we see it, we trade it. If we don't, we do not trade it. So we're not seeing anything. I'm going to hope that we can hit that level. Now, as you guys see, we're getting these small moves, but that's not enough to identify it. Oh, that looked like that would have been something. And then now we're getting this move here. Let's see if we get that set up. Oh, okay. So this was literally it right here. So this was literally the setup right here. As you see, we did not peak here, but if you pay close attention, we had a move, a move, and a move. And this looks like a head and shoulders and also a triple top, or you can see this as a double top. But the moment you see that, look at that beautiful 1 to 3. Actually, that hit that area perfectly. And I'm curious to see exactly what happened was, look, it rejected that. And that is because this is a potential new low based off of Fibonacci himself. So this is why these are so powerful and so effective. And I say this all the time, guys. Doesn't matter what you're trading. You could trade this on anything, but it's super effective on US 30 because it's the most volatile. And yes, it does work on gold. And yes, it does work on NASDAQ. But I have to create other videos for that because it's a little trickier than really gold. But at the end of the day, if you want to take this effectively and take this to the next level, you absolutely can. This is why we just opened up our 101 Master Bootcamp to you. If you're interested, this is where we will help you take a $500 account to 5K or get you to get payouts through your prop firm. So if you are interested, how it works is 1, you can join our Discord. It is absolutely free now. And or 2, you can go to app.tradewithsolo.com. This is where you can apply. And then when you apply, our team members will literally get you on a call with me to see if I want to actually trade with you. And if so, we will do that consultation call. And then after that, we will do another follow-up, and then we'll set up the entire one-on-one masterclass, which is an 8-week program. So other than that, y'all, I appreciate you, your boy Solo, tapping out. Peace.